Welcome to July 1st. Alpha's RTX has 5% on the board. Let's get started here. Okay, as we recall yesterday, we are now in the July Elvis Shift. The Elvis Shift for this July is that we are going to be using all the stochastic scanners. Let's go look at them. But not all. We're going to use the ones who have shown tremendous promise. Here they are. So we are stochastics. These are stochastic uptrend, downtrend, which is the core. That's the center group of the center commands of the stochastic. Then I elaborated one more step by saying price had to be either close or above in the direction of the stochastic is number 2, and number 3 is our stochastic downtrend uptrend. In this here, the difference is this is price must be closing above or below the 10 EMA. Here, the 10 EMA just needs to be trending in the direction of the stochastic. So as the stochastic scan comes up with a down, then the 10 EMA has to be going in the down direction also. With the weeklies, we are bypassing them because of their poor returns on action. So that is the Elvis Shift for July, and now we'll go back and let's go into the results. So yesterday, after running the scanner, we ended up with a tremendous opportunity, and we got a whole mess on board. Right now, RTX is in the lead, and there it is with a with only 5%, but it's starting the right direction. Remember, we are still applying the exit rules. The exit rules are once we clear the gantry in a significant amount of space, we are going to move the stop to the EP, the entry price. That'll be a EP entry price stop. We're down here. Also, too, because this was a less than a $25,000 account, we started we put the original out at $80. So we're gonna have to change that. So now we got to come here and step through all this. I'm not going to have time. Let's go. We're going to do with the leader, and then step through all the others, and then I'll do that on the off screen. So our low here. Bring this into play. Our low is based off this low, so the dipper low here, and the low is 84.14, and we'll make that 84.13. You decide if you want to be the 1 penny with Rockwell, or you want to go with 10% with Wealth Builders, or you want to go with 1% of ATR, OTA. Everybody has little nuances about the buffer. I like just to round off to the number, so I'm going to go 84.10. Now, does it matter? It matters to protect capital, but once we clear the gantry, then it's going to be protecting capital better because they're going to reduce our opportunity, our risk exposure. So with that said, we're going to go now to 84.10. We come over here to the bubble, come down to cancel replace order. This is a lesson. Come to the little gearbox on the far right, and now put in here 84.10, and away and away. And now you can put extra notes here. I'll also put this here as a ratio exit. This is a ratio exit, and away. And there we are. So now we have now got past our initial getting in. Now, remember, extremely important for accounts under 25,000, you gotta watch for the pattern day trader rule. If you do what they call a round trip, you initiate a trade during the day and you exit the trade prior to the close. That's a round trip, and for accounts under 25,000 by government rules, not the exchange rules, your account will be shut down, will be frozen if you exceed more than 3 in a 5-day period. That's why we start off with an exit way, way far away, and then move it up to after the initiation getting in. Excuse me. So there we are. Let's do one more example here. Let's go ahead and check out gold. And we'll come down, we'll go to gold. And where is gold? Okay, so auto zoom into 3, that's about it. And there it is, there's gold. And you can see gold got triggered. Now gold, I'm glad we got on gold. Gold, we got a bad slippage. Not terribly bad, but still. We were anticipating 579. We got filled in at $6. So that's an extra 21 cents against us. Same situation with the rules. It's going to be moving up here to the entry. Okay, and there's the low, the stop is based on this dipper low right there, and that dipper low is 164. I'm going to take the 164 even, and I'm going to go ahead and put it in the 164. Oh, I had, oh no, there it is. I got to change it. It was 160 to start the trade. Now I can move it to 164. And confirm and send, and send. And now we are at 164. So that's it. Now, there's two other things I need to cover here. You know, we had all these trades in play. I've been going through them and adjusting them before the day's out. But here's something else that happened. We also have to go and look and see what did not trigger. So I have my list from yesterday, and one of the ones that did not trigger was XLC. Right there, XLC did not trigger. So we'll go here and look at XLC. Okay, there we go. And sure enough, XLC was a put. And see what happened. It opened to the upside. So now this is how you cancel the order, as I mentioned, right there. And don't cancel the sell order because the buy order will still stay in play. What we will cancel is the whole order. If we cancel the buy order, the sell order will automatically cancel with it. And take a look, gone. And now our trading account has moved up. We were down to about $900. Now we're back at $1,400. So, and you also got to make sure you keep your notes to date. So you double click here, come here, and go 7/1. Order canceled because reverse price action. That's it. Done. All right. One other who did not trigger, and that was WBA. WBA was our intended target of good interest. And I'm trying to find my notes. What happened to? Okay, in minutes of time, we're gonna have to pass. All right. The bottom line is, here's what happened. It didn't trigger. Look what happened. This was a call, and it went down. So the thing with stochastic strategy, if the order doesn't trigger, cancel the order, take your buying power back. That's a lesson. And then run the scanner fresh. So then we're going to do the same thing. We're going to go ahead and cancel the order here. We're going to come to our notes and go 7/1 and say order canceled because price reverse. Boom. And now we're up to 1663. So what does that take us down? That takes us to the scanner. Yeah, we're already in scanner time. So here we go to the scanner, and we'll start off in the scanner zone. We're going to start off with the trenders first. The trenders are much more sophisticated, and therefore I give them more credence as to the others, because the others are not as rigid in their selection. Therefore, we expose ourselves to slightly risk that the trade might not go in our direction. But let's go with stochastic uptrend, and you can see it's the alphas, and we're going to go, and results are. I found my notes for the selections that we were looking at yesterday. Yes. Okay, we have 3. So I am now going to mark those 3 down on my sheet, and that's going to be for calls. And then now we'll go to the scanner, come over to personal again. Now we're going to the stochastic downtrend side, go there. And the answer is, oh, we're running out of time. Nope. And there's nothing for the downside. So there are no puts. And then we will go on. Then we will go on to and load up the next 2 scanners, which would be the 10 EMAs and then the core. Well, that is it. We're out of time today, and I thank you very much for stopping by. And we are on. The alphas got their 5% going into tomorrow, and we'll see how it all works out with the new Elvis Shift for July. Thank you very much for stopping by and checking it out.